Our turnover for the year was up by 5% to 2.5 billion rands. Our EBITDA came down 17% to 349 million rands. Revenue was up largely because of the depreciating rand, average of 821 for the year, and that was sufficient to offset the lower ferrochrome price of 121 US cents. Our EBITDA largely impacted by our operating costs, which however we were able to contain at 9% in terms of total ton cost. A large reason why we were able to do that is because of our ability to bring about efficiencies from our electricity consumption specifically. Over the 10-year period that we've been operating, that cost saving has been in the region of 25% on average. That resulted in our headline EPS coming down by 1 cent to 5 cents. From a cash position point of view, we started the year with 93 million net debt. That number increased to 441 million rands net debt at the end of the period, which really comprised of cash of 83 million rands and the balance being debt. What led to the increase was cash that we generated from operations of 254 million rands. We spent 179 million rands on sustaining capex, and the balance was on expansionary capex. In terms of our financial position, really the items that I'd like to flag are inventory that went up marginally, largely as a result of increased costs. We also saw our trade and other receivables go up significantly with an increase of about 30%, and that was as a result of the depreciating rand, as well as higher volumes sold in the fourth quarter of the year. From a capex point of view, as I indicated, we ramped up capex this year by 49%. Outlook in terms of next year, capex sits at 703 million rands, the bulk of which comes from Lion. 528 million rands will be spent on Lion, which is expansionary capex. The balance is sustaining capex. We have sufficient cash reserves to fund the 528 million rands. 83 million rands of that is going to come from our cash reserves, 288 million from the ABSA finance facility, and there's more than sufficient other reserves in terms of the overdraft facility we've got with the venture, as well as free cash from our operations. As far as our outlook for the 2013 year is concerned, focus is going to be on building capacity and bringing through efficiencies. And then as far as the 2014-2015 year is concerned, our focus is really going to be on bringing down debt and building sufficient cash in the business to strengthen our balance sheet.